Hey, what's up, everyone? Welcome back to Financial Hub. My name is Caleb, for those who do not know me, because we have recently seen a surge of new followers. Thank you very much for helping us reach 7,000 subscribers. If you haven't followed us just yet, please take the time to subscribe below because it helps us continue giving content to you guys, and it also gives us motivation. The more numbers of people who are seeing following us, the more we want to help more and more people who are looking to do trading in a professional and in the right way. So in today's video, I'll be doing two videos today. First video I want to do, which we haven't done for a while, is market analysis. I want to do for you some market analysis, especially for those new people. We don't want to just be talking about trading and our performances. We also want to help new traders who are starting out, how we look at the market, how I analyze. You'll see how simple I do analyze the market. I don't look for complicated things. My charts are very simple. I never have too many things going on at the same time. I like to keep it simple, and that's what works for me. But at the same time, what works for me doesn't mean it will work for you. So even my partners trade differently from me. Ken has a different strategy. Taras has a different strategy, totally complete from totally opposite of one another. Ken's strategy is almost like mine. Taras's is almost opposite. So you can see different people adapt differently to the market, and that's why we keep saying signals never work. So we'll never find us giving out signals. I never do that, because how you approach the market is different from me. We all have different temperaments, different characteristics, different personalities, and that makes us approach the markets differently. Some people are aggressive, some are conservative. We are not all the same. So depending on how you approach the market, that's how you should do it. And that's why trading is very unique. When you watch people online and you're trying to really understand how does Caleb trade so that I can understand how he trades and trade the same, trust you me, we're totally different. So today's first video, I'll be doing is market analysis. And then in the next video, I want to talk about an update of my prop firm accounts, how they're going, and how I passed my new challenge. So after watching this video, be tuned for the next one, which will drop, I think, the next day. And yeah, it is what it is. So first things first, let me share my screen and jump straight into the analysis. So first of all, as you can see my screen, I'll start with the dollar index. Dollar index is a very big factor market for me because it sort of acts as a confirmation for many of my direction, trends, trades that I'm taking. It really acts as a lot of that, because you can see for me, I only trade USDCAD, Aussie dollar, and gold. I only trade dollar pairs. So anything that is not dollar related, I do not trade. I only trade 3 pairs. I keep it minimal. Many of you have been following us, so you know how I actually analyze the market. So that's what I usually do. So first things first, if you look at the dollar, just a big picture perspective, I don't look at the weekly that much because it's a very long-term perspective in the market. But I tend to look at it from time to time, especially when the month comes to an end, like we just started February. I like looking at the weekly chart, looking at is market at a key level, what is the direction the market is moving at. That's the only thing I look at. I don't look at indicators or such stuff on a weekly chart basis, because for me, price action is key, and that's what I look at that point. So you can see for me, what I'm looking at, market rejected this level. This was back when December was coming to an end. So you can see how it acted as a directional bias for the whole of January, because this was the last week of December. And then the first week of January, you're seeing how markets just went bullish. Markets came and rejected the support level as the year ended. And as the new year started, you're seeing a new bullish factor or momentum coming in. So for the past, how many weeks are these? 5 weeks. We haven't seen any red candlestick this whole year of 2024. So far on the dollar index. If you look at the 1 month chart, it's even just one big candlestick to the upside. You can see this market strongly close to the upside, but I don't go that far to the weekly chart, monthly chart. So what I'm looking at here, rejection market has really reacted in a positive way to the upside, and market has really been pushing to the upside. So far, you can see market is now at a crucial level, and I never like trying to, what is it called? Like foretell the market and say, over here, I'm expecting markets to reject and close to the downside. No, I read the market, what the market is telling me. So for me, market has reached a very big target level for people who bought down here. This is a very crucial level. Why? Because before, you can see market rejected that same level and pushed to a new low. So that's how you read price action. Markets push to a new low. So it's important to pay attention to that level. So this week might be a bit slow for me also as well. Maybe if I get maybe small trades here and there, but I'd like to wait for a weekly close here to see where to see whether market would reject this level or continue or close to the upside. So we can close like this previously one before, reject that level, which can bring a bit of bearish signals next week. If not, then market closes bullishly to the upside, then we can see market starting to push further to the upside in the next coming week. So, and that's just my opinion, and opinions change. So that's what I'm watching for now. If I come down to the daily chart, you can see sort of more or less the same thing happening. You can see at that crucial level, market rejected here before. You can see we rejected here before. There's a time market broke to the upside, retest the key level, went up, came and broke down, retest, then came down, retest again, then came down. So market is at a really crucial level. But what I'm paying attention to, market has approached this time a bit differently, because you can see before market was coming and rejecting. This time market sort of closed above. For me, I pay a lot of attention to the Dow theory, and you can see how market has been going lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. We broke structure over there, and that's why you're seeing market is starting to be pushing to the upside. So I've been quite dollar bullish for the past couple of weeks. That doesn't mean I get trades every time I'm bullish or bearish. I haven't gotten any clear signal just yet to buy or sell, but we can see market has been moving to the upside. So yesterday, markets continue moving to the upside. Today's Tuesday, we're seeing sort of a bit of a rejection. So I'll wait and see what will happen around this crucial level, because you can see before market sort of consolidated around this zone. We broke above this previous lower high. For me, then market sort of had a previous consolidation, broke out, consolidated again, and then continued pushing to the upside. So for me, I'm seeing the impulses are starting to push further to the upside. So long term, I might not be surprised seeing the dollar continuing to go further up from here, okay? If I go to the 4-hour chart, so we're just doing a top-down analysis, looking at the market from a top-down, and you can see clearly from my chart analysis, I basically look at the trend direction, key levels, then I look for those patterns. So what I like teaching in class, market is always moving at an impulse correction, impulse correction. So you need to know the direction of the trend. Then for me, I'm normally looking to trade in that direction. But number one, what is key and which I teach in my classes is how to find the true direction of the trend. And sometimes for you to find that, you need to be really patient. It might take some time for you to really figure it out. But for me, I'd rather be patient than try and trade every buy, sell before I get one trade right. So, and I'll show you in my next video how I've been trading, my performances, how I've not had a trade last week. Ended up finishing the month of January with a 2.5 profit on my account. So continuing here, you can see on the 4-hour chart, market has been breaking structure, forming support levels. So the path of least resistance for me on this one has been to the upside. You can see how impulse, correction, impulse, sideways correction, impulse, we're sort of getting a correction. See how we broke above this key level. So for me, those are key. Market is sort of trying to get resistance from this next key level. You can see that, okay? So this is my first primary one. Then you can see the secondary one is which markets broke above, got some liquidity. People took some targets, like I'm telling you on the weekly chart, and you're seeing that correction coming through. So for me, I'll continue seeing if we get further bullish momentums to the upside, because after this strong impulse, which was catalyzed last week by, what was it, NFP, that's what you're seeing markets. We got better than expected job increases for the past month, okay, and that's what pushed markets to the new heights. It was a basic bullish signal. I saw some people trying to short this. I don't know why you don't wait for data to come out before you make decisions. That was a simple trade idea, but you should just, markets came out better than expected. This is the times that where markets acted perfectly with the fundamentals, the technicals. Not all the time. It doesn't mean all the time if markets come positive that markets are going to go up. Sometimes the opposite might happen because the sentiment was different on the market. But this time, that's what happened, and that's what you're seeing happen to the dollar. Okay, so that's what I'm looking at the dollar. Don't spend too much time here because I don't trade it. Now, taking that data and going down to my other pairs, starting with the dollar, starting with gold. Now, a lot of people trade gold, and I see a lot of people purely trade gold alone. I don't know how you do that. I think people survive because for me, gold can be very volatile sometimes. And I'm not saying volatility is bad, but it can really trick you to think market is moving in a certain direction when it's really not. Like last week, you had a strong bearish momentum, then market ended up coming strongly bullish to the upside, and then ended up falling further down to the downside. And I'll look at it on the 4-hour chart. So looking at the weekly chart, remember I'm looking at the weekly chart basically for candlesticks, the direction, and key levels. So currently where market is at a very strong key level. And you can see this point here. You can see this point here now. Markets came strongly rejected once, strongly rejected twice, strongly rejected a third time. Okay, you can see how those wicks reached that point and markets fell. But this time, like I'm saying, price action is a bit different, and it's more important for us to pay a lot of attention to here, because what you're seeing here, markets came and actually broke above it, strongly broke above it, showing sort of some part of least resistance, but also the resistance was quite strong. But just look at candlestick data, candlestick information. So markets came strongly, broke above. That's why you're seeing the wick reach that high, strongly rejected. But after that strong rejection, we did not get a successful follow through to the downside. So what do I mean? Markets did not continue falling strongly. Yes, it was a strong rejection, but markets did not follow through in the next couple of weeks. And sort of the price action around this level, you're seeing market has really been consolidating around this level. Okay, now this is data that we should take in. It can be sort of market consolidation before it pushes further to the upside, and this happens a lot before market breaks a crucial level. It reaches that level, sort of has a sideways correction, which most of you I might hear calling accumulation of orders. So you might find that's what's happening before market pushes to the upside. So that's what I'm watching. I'm watching to see what price action is different. Last week, if you saw this candlestick here, market had started pushing to the upside. Sort of, I was waiting to see like a solid bullish close at that level. But like I said, NFP happened, market strongly rejected and closed further down. So I'm not seeing that strong momentum to the downside. Okay, I'm not saying that might not happen. It might happen, but I'm paying a lot of attention to this sideways movement. So if you go down to the daily chart, just looking at it closer, you can see market has sort of been in a sideways consolidation at this level. And if you look at it closely, you can see that market has been forming higher highs, higher low, higher high, higher low. Not a really new high, but a higher low. And if this structure is not broken, then we might see some momentum to the upside. So you see, I'm using data from the big charts, coming down to the smaller time frames and looking at what structure is forming, okay? Because the big picture on the weekly is just showing trend, rejection, key levels, okay? But the daily is giving me more meat to the more data, okay? So I can mine more data from this one. So if market is unable to break this level, this is a $2,000 level. You can see market came and rejected this level, broke to the downside, came up, now it's acting as a support, okay? Before it was a resistance, now acting as support. So I'll be watching this level to see if market doesn't break above it, then we can see momentum coming to the downside. But for the past 2-3 days, we can see market has come down with strong bearish momentum after rejecting a key level on the 4-hour chart. You're seeing this level. Now, this is what I was talking about last week. Last week, markets strongly rallied to the upside, then rejected this key level, which market has been rejecting not once, but 3 times. Okay, you can see that's a first, second, now a third time. Rejected that level and strongly fell to the downside after NFP came out. And you can see market has followed through that momentum to the downside. But we've gotten some support at the 2015 level. Okay, you can see a major look for key levels. You can see that's a strong key level that market has been rejecting, sort of a breakout and retest of this level. So I will not be surprised if we see markets continue pushing to the upside. Like I said, we have our previous higher low at this level. If market does not break above that level, and we can highlight it because you can see it's a key level that started previously here. This is how I draw my key level. Just a tip. Personally, I don't believe in taking those long-term key levels that starts way back in 2000, and I'm saying I'm still respecting them. For me, markets are dynamic, and therefore also my key levels are dynamic, meaning they're not static. They keep changing from time to time. I never stay fixed on one level, but that's how I trade, and people trade differently. So you can see this is, as long as market doesn't break above this level. So it was sort of these two range bound levels. Let me show you this level. So these are the key levels that we should pay attention to. That level and this level, okay? Now, this level is crucial for us to break. If we break to the upside, then we might see a lot of successful follow through to the upside. But we got a rejection, markets came down. We have come back to this level. And that's why I'm saying market is sort of in a range. We haven't broken below this level. If market breaks below this level, you can see successful follow throughs to the downside. But so for now, we're sort of in limbo. So for me on the gold, I don't have any bias just yet. I'm patient enough to wait for a clear direction. I'd rather have clear direction, for me, that reduces the risk I'm taking in the market when I understand the market is moving in a certain direction, because I believe that the risk is greatly lowered when we get the path of least resistance and trade in that direction. Basically, what I mean, trade in the direction of the trend. So that's what I'm watching on this one, nothing much. So I'll be patient to see, watching price action. I like going, deleting my analysis, getting new stuff, hiding my data like this. I mean, my analysis, trying to look what can I not see, what's happening in the markets, just to get a perspective. I don't like staying too fixed on what I have, because it tends to clog your mind and you don't see new opportunities forming. So for me, I tend to draw, rub, and then get a new perspective. Not that I'm doing that to look for trades, just to get a perspective and to see some early indication for what might happen in the market. So that's what I'm watching on this one. Nothing much. Seeing market rejecting this level. Let's see if we get a follow through to the upside and what happens after that. So Aussie dollar, I'll do that one before I finish with USDCAD. So as a disclaimer, I only trade these three pairs. So if you're waiting for me to analyze GU, EU, USD JPY, GBP JPY, Euro JPY, Euro GBP, I don't do those ones. So my partners in the next couple of weeks will be doing analysis on those ones because they pay attention to them. But for me, I tend to stick to what I know. Stick less is more for me, and that's what works. So on the dollar, you can see, on the Aussie dollar, you can see the weekly chart. Market has been in a very bearish direction. Okay, we can see this this downward trend line, a first touch, second touch, a third touch, rejecting that level in line with this key level. So you can see same thing as December came to an end, the markets closed at a rejection. So you're seeing sort of the same thing happening on the dollar, the same thing that happened on this one, but in the opposite inverse way. And you can see for the past also 5 weeks, we haven't had any bullish candlestick close. Okay, all of them have been quite bearish. And last week, you can see markets really it's come also to a very crucial level, just like the dollar. This is a crucial level that I want to be paying attention to. Can markets break, reject, or consolidate around this level? Now, those are data that you need to read. So for me also, I might wait for candlesticks to close on this day. Markets have strongly been falling to the downside. Can we get some correction? Can we get some sideways movement? You never know. I'll wait for markets to tell me that. I read what the market tells me, not what I want to see from the market. And that's why a lot of traders confuse trading analysis, especially technical analysis. You start trading what you want, not what is there. And patience requires you to trade what is happening in the markets. Impatience will make you trade what you want to see happening in the markets. For example, you might come to this level, you want to see markets going up. So what you start doing, you start trading to the upside. Now, that's purely gambling, because that's not how proper calculated risk approach happens in the markets. For me, a well-calculated approach is first to find the path of least resistance, affirm that, look at whether market is at a key level, because below as market was falling down, it was sort of in limbo. It wasn't at a certain strong rejection level, and that's why you're seeing markets falling to the downside. So for me, I wait for data information from this level. But on a big picture perspective, this market has been in a bearish trend. Looking at the daily chart, on the same pair, you can see market has been forming lower lows, lower highs to the downside. You can see that lower low, lower high, lower low, lower high, strong lower low. Okay, I thought we might get some bullish momentum after this candlestick last week. Okay, those are day one, was this Thursday. After that close, I thought markets might really push to the upside. But remember, this is something I also teach my students. When market is moving in a certain direction, the opposite factors are often ignored. So, for example, when market is moving in a bearish direction, bullish factors are often ignored, okay? Because those bullish factors sort of act as a sweet spot, as a seduction where people are pulled in, take a certain trade, and kumbe, they're acting as liquidity providers to the big players. When you're looking to buy here, there's someone who's selling and selling heavily, okay? So you can see before, look at this candlestick. Market sort of rejected. If you read textbook, indication will tell you buy. But what happened? Markets fell. Same thing happened here. Buy, markets fell. And for me, that's why it's important to find the direction of the trend, because once I find it and it's established, I'm never looking to trade in the opposite direction. And that's what helps me avoid a lot of losers, okay? And that's what's happening here. So you can see bearish correction, impulse correction. So sort of market is sort of correcting at around this level. We can clearly see that we strongly broke below this key level, which was acting as a key level before. Market has strongly broken below, sort of getting some correction today. Okay, if you go down to the 4-hour chart, looking at the 4-hour chart, you can see same thing happening. Markets have been pushing to the downside, some correction coming in. So what I might be looking for, if this direction is able to continue, if you get a good correction around this level, most of you know how I trade the flag pattern. If I can be able to get a good correction flag pattern, then I'll be looking to sell. If it doesn't come, I won't sell. Like for example, I was looking for a good flag pattern a couple of weeks ago here. I was waiting for sort of markets to come and get this rejection. So I was waiting for markets around this level. Didn't get to that point exactly, would have been a perfect sell. So I was waiting for markets to come around that level. There was a highlighted key level around that zone. If I highlight it here, you can see that level there. So I was waiting for a good rejection around that level, but I didn't get that trade. And that's why I don't trade the opposite direction, because opposite direction correction, when you're trading a correction, they tend not to reach targets. It might get a correction because this is a very valid correction, not a flag like I wanted, but it's a valid correction. But what happens and what happens perfectly, the impulse, the direction to the trend, you can see how it moved to hit targets. Okay, so this one, if I get a good correction along the week, then I'll be looking to get a sell. So far, I'm bearish on this one until factors change. Okay, USDCAD, weekly chart, top-down analysis. Direction has been to the upside, just like the other pairs. It's sort of in the direction that the dollar has been following, the dollar index. So you can see this first touch, second touch, third touch. Most of my pairs that I'm trading have been having that directional bias with those third trendline bounces, rejecting a support level. They sort of move in tandem with one another, but not in exact magnitude. You might find people are trading and looking for markets to move in exact magnitude as one another. You might find gold has moved 1,000 pips, USD CAD maybe just 200, and Aussie dollar maybe 250, 200 as well. Because for me, USD CAD and Aussie dollar are not very big volume pairs, but gold is a very big volume pair also in terms of volatility. Okay, so looking at this, that's what I'm watching. Markets have been moving to the upside. Nothing much to read from the weekly chart for me. On a daily chart perspective, also paying attention to what has been happening in the markets. Markets have been moving to the upside, sort of breaking structure to the upside, not broken clearly, the previous lower high. So I'm still paying attention to this one. Like I said, I've not been getting a very clear indicative trades setups from my pairs. So once that happens, I'm always patient to wait. But on a daily perspective, you can see the last 2 days markets have been bullish. So over here, if I get a good correction now down on the 4-hour chart, because the 4-hour chart is where I look for trade setups, is where I'll be looking to get a trade. Okay, so if I wait for a correction around here, if it happens, then I'll be looking for markets to move to the upside. If you trade the flags, you can see this level that markets rejected this level. This wasn't a clear flag for me to trade. It didn't tick my boxes, and that's fine with me. I don't pressure markets to give me a certain setup. If I'm not clear with it and doesn't sit right, I'd rather not take it, because if you take a setup that you don't sit right with, you might trade manage it badly, which it could have been a winner, but you trade managed it badly and it ended up making you lose money. So for me, I tend to wait for something clear to happen. So markets rejected this support level. You can see that was a clear bullish direction up to this level where markets rejected, got a very good rejection, and it's sort of moving to the downside so far. So that's what has been happening on this pair. Markets are rejecting levels and now moving to the downside after targets were taken here. This is just basically profit taking. Okay, markets correct a bit. If you get a good correction pattern, then I'll be looking to buy into that market. So that's how I trade. You can see I use 0 indicators. I use purely chart analysis, price action, looking at certain patterns. But for me, you can see how my approach is very patient, looking for the direction of the trend, looking for impulse, correction, impulse. Those corrections, I'm looking for a certain pattern to form so that I can trade the ultimate impulse that market is going to create for me. So that's basically it for me on fundamental perspective. This week, what is really happening? Let's look at a few stuff. Yesterday, we had a few data. Powell was speaking. Today, early morning, we had some cash rates, which is basically interest rates from the Aussie dollar market. Didn't react that much this morning, because if you look at the Aussie dollar, yes, it started going bullish, but if you come to the 1-hour chart, nothing much happened this morning. Okay, you can see that nothing much happened once that data came out. Yes, it moved further to the upside, but a lot of things were factored in last week, and that's why you're seeing nothing crazy has happened in the market when that data came out. Other than that, we have New Zealand dollar news later on in the week, unemployment claims, and last week. For me, these are not very major data coming out this week, so markets might really move in the direction that was established last week, which was more bearish than it is bearish for me on things like Aussie dollar and gold, and for USDCAD more bullish. But like I said, when opinions change, when the factors change, this quote, like I like using, strong opinions weakly held. When market shows me something different happening, I change my perspective and I move in that direction. For example, like last week when gold has started moving to the upside, breaking above the 2050 level. And if I come to the 4-hour chart, just to explain that more clearly, if you look at this, when market started breaking above the 2050, for me, it was very bullish data. I was waiting for this strong candlestick to close above this level, breaking above this previous rejections, these levels, okay? So I was waiting for that close. So it was already very bullish. But when markets closed below and started moving to the downside, especially after markets closed below, started moving sideways here, then for me, it was clearly a rejection, okay? Because strong opinions quickly had. I was strongly bullish. When markets changed that data, and that's what it was giving me, I tend to change my biases, my opinions, moving more to the downside. So that's basically what happened in the market, and that's what I'm watching. So for me, I'm sitting tight, waiting patiently for anything that I'll get from the market. I don't pressure markets. If it doesn't happen, it won't happen. If it happens, well and good. Sawa. So I hope you've enjoyed that analysis. More of this will come very soon. And be sure to subscribe, like this video if you want to see more data coming out, more information from us, and a lot more analysis every single week. So I hope that helps, and I'll see you in my next video where I talk about my prop firms, the new prop firms I'm trading, where my accounts are, and how I passed my recent funded account this year. Yeah, I think there's a lot on that you really want to watch. I think a lot of you will learn a lot from it. So that's it from me. See you guys next time. Have a wonderful week, and like I always say, what do I say? I haven't done YouTube for some time. Always stay financially literate. Stay woke. Stay financially literate. May the peeps be with you. See you soon.